Our next guest says there are 3 earnings winners you want to stick with. Todd Gordon of TradingAnalysis.com is over at the Plasma to take us off the charts. Todd, what are you looking at?
Hey, Melissa, first, before we jump into those 3 names, let's just take a look at the S&P. Something I find really interesting, really compelling for this market. The indicator below the S&P here is the average true range. But what we've done is normalize it and made it the percent average true range. So what kind of swings is the S&P seeing week over week? And to start the story here, this low reading right here, if you went back even to the monthly chart, this percent change, realize month over month, week over week, was the lowest in a century if you look at the Dow. We're coming off extremely low readings in terms of volatility. We're starting to see it move up. We got up to about 2.6, 2.8% per week, realized percent change high to high. What does that mean? If you go back and look at 2010 and 11, you were trading 4.5% week over week. I think the volatility that we've seen will continue. So as I segment into the next, you really want to be a stock picker in the market. Before we flip off this chart, you're seeing a series of higher highs and lower lows in the S&P, expanding volatility. I do think we have short-term strength up to 31, 32, 3,300. But then if this pattern, which is a technical pattern, holds, we might have a retest of a lower low, then we go. So I'd say just be careful. If volatility is going to continue to expand, that's what I'm looking at. So that being said, first one, JP Morgan, really nice conversation. I added JP to my portfolio. I like yields starting to bottom, starting to move up here a little bit. JP does not have resistance if we source from the 2011 trend channel until about 135. That's where resistance comes in. So it looks like there's a little bit more room to go. Next one is going to be Netflix. I don't own this. I'm waiting for Netflix to kind of give us the go-ahead through this 380, a beautiful inverse head and shoulders. If we can get enough momentum following that decent earnings report to get up, I think Netflix is finally going to get that 4 handle back. I look to add Netflix. The last one I just added, I have it in my stock portfolio. I also have it in the options market. A really nice Elliott wave pattern. Wave 1, setback in 2, beautiful breakout in 3, kind of a consolidation here. And it looks like we should have another push up in wave 5 after that really strong report in Twitter. So I like Twitter as well.
You know, Todd, is the first chart that you had on the S&P 500, I like how you nonchalantly say the S&P 500 could have upside to 31, 32, 3,300. I mean, that's a pretty big spread on an S&P 500. So where do you see it going, and what's that downside? You said downside first and then a possible break to the upside. What's the up and down here?
What's the up and down? So are you looking for time frame or more?
No, the point spread. From where we are right now.
Okay, so I mean, I think 3,000 is a foregone conclusion. Over the next 12 to 24 months, I do think we'll see that 32. But again, are you looking for downside target, Melissa? Or what's
I want to see what the risk to the downside is versus the risk to the upside. So you see 3,200.
The pattern says, and this is not me saying we're going here, the pattern indicates that we will test 23 to 2,400 when we get the next down leg. I don't think this is the top. I'm not calling the end of a 10-year bull market, but the pattern holds that we should make a lower low below 2,300. So that points you to 21, 2,200. At that point, once everybody capitulates, that's when I think we mount and make a final push to new highs, at which point then there's going to be problems. That's the way I'm playing it for right or wrong.
Right.
It's my game plan. We shall see.
It's quite a call. Todd, thank you. Todd Gordon, TradingAnalysis.com. Steve, I know you like charts.
I do like charts. And the problem is...
Can you sneak up to 3,300?
I don't know if I can sneak up there. I do agree with them that we should, in theory, test those levels. But the problem is, I saw the bounce on a chart. I saw the reason why we should bounce 10% off the December lows. I didn't see the bounce lasting longer than 10%. So I have to factor in, I thought we were going to recheck those lows of 23.50. I have to factor in now how aggressive we have been to the upside to maybe it's a 25.50 check, not a check all the way back to 23.
You know, Todd said something interesting. He's like, I don't want to call the end of a 10-year bull market. You know, it's interesting. He said that when it does go back to 23.50, it will be, retest this or possibly make a new lower low. We had that in 2000, excuse me, in 15 and 16. You know, we had a new lower low. It was one of the first of the entire bull market. And look where we are. I think we broke out at 2,000 and now we're touching at 3,000. So to me, the S&P could easily go up or down 400 points. The probability is, I think, greater to the downside at this point.
That's a pretty frightening market. I mean,
we're
going to easily go up or down 400 points on the S&P.
Be a lot of specialists.
You tell me what the Fed's going to do, and I'll tell you, where we're going to be in the next 6 months, because that's all this is right now.